Hey, and very good morning to you, and welcome to Friday, October 29, 2021, to the TriggerCharts pre-market rundown. I'm Andrew Horowitz. I am the co-founder of TriggerCharts, and we are going to go through a variety of items today to help you find those sweet winning spots, hopefully, for your trades. You know, before we do anything more, of course, as I say that, I want to also tell you that everything that we talk about really is for educational purposes only. Investing involves substantial risk, and past performance is not a guarantee of future results. You know, what we talk about, what we do here today is try to give you those the insights, the confidence, the levels of interest, everything about where we are from the aspect of the levels that traders are looking at. When we look at the charts that we show you, like the one you're seeing on your right now of Apple on a monthly basis, you'll notice there's a lot of bright green going on there, but there's also a variety of little horizontal lines. Those are really important. Those are swing areas of volume-based levels that traders have been watching, eyeing, looking at. And, you know, a lot of people write us and they're like, hey, how is it that your lines, you know, when something comes down and starts to fall, it gets to that line on a 10-minute chart or a 30-minute chart, and it bounces right in that line. And the reason for that is the lines, the horizontal levels of what's called the altimeter. The TriggerCharts altimeter is all about finding the area of interest that institutions and retail, hedge funds, whoever is out there is actually putting their money to work at. And that is really important. All of those other things that you see, like moving averages, those are just, those are one-dimensional items that just look at price. But we start looking at not only price, but where there is an effect, where there is a pulling of the trade ticket to position someone's portfolio into a position. Well, that makes a lot of sense when you think about it. You can look just as a variety of areas on this chart. This simple chart, there's a monthly chart of Apple, which is pulling back today in the pre-market after questionable earnings. But if you look at what we're seeing here, look at how nicely this whole area just comes right back into a few different lines, holding support and then bouncing up, or just simply just riding right along that. And that line is not adjusted once we draw it until there's a new swing that happens. And what's important about this is when we look at the overall levels and we look at the volume-based price on this, these are culminations of what's called market profiles, which are used by professionals regularly. And what happens is that we consolidate this into areas that are really important to watch, and then beyond that, color code where we are in terms of the overall positioning on a short-term or long-term basis. Okay, with all that out of the way, nice group today. Wow, look at all the people. I'm back from Egypt. I took a little trip to Egypt, and Kevin was filling in. Did a great job. I listened to his conversations and his insights last week. You'd find all that and those recordings over on YouTube, our YouTube channel, or over on TriggerCharts.com. Before we go any farther, I want to mention two more things quick. One, anybody that does sign up for a new subscription to the Commander Series will get a 4-hour, I think it's a 4-hour course. I think is it a 4-hour course? I always think it's a 4-hour, 3-hour. It's kind of a long course, which is kind of cool. You can get a course that is an absolute winner where you could do it all yourself. It's 4 hours. It's 3 parts, 4 hours. And it's free, $199 value. And it's called the Advanced Coaching Series. And just send us an email at support@triggercharts.com. And finally, if anybody has any symbols they want us to look at, we have a variety we're going to talk about. Put that into the chat where that note just came in, or maybe there's a flashing bar on your Zoom. All right, what are the themes that are going on? We try to look at each and every week. What are the themes that are really spiking up and that are very important with regard to markets? Now, obviously, what we're talking about is charting, and sometimes we say that it really doesn't matter what the news is, what the item is. It doesn't even matter sometimes the name of the stock or the symbol. But when we're looking at a chart, well, just use the chart as your guide. Sometimes, though, it's really nice to know the backdrop. And the backdrop really gives us a bias. Are we in a long bias? Or are we in a neutral bias and a short bias? In other words, are people buying the dip? They selling the rips? Kind of ambivalent. So here are some of the things that are going on right now that I think are really important. Obviously, stocks have been on a rampage over the last 2 weeks, turning around the drop in September. One of the things that we are seeing, the themes that we are seeing, that if something drops, it must be good to buy. Simple as that. Doesn't really require any significant amount of insight beyond just that item right there. But the ongoing themes right now, earnings, we're seeing beats and more beats, and about 83% beat rate above earnings expectations on about 40% of the companies that have already reported for the month this earnings season. And that's pretty good. Kind of expected what you see, about 80%, 75 to 85%, give or take. What happens is that normally analysts will start dropping their numbers as we get closer to the level into the earnings season when the print happens for any company. And we saw that a little bit. We saw them actually raise numbers for a while, then kind of come down a little bit. So this is good. We see about a 37% year over year increase in earnings for the S&P 500 companies. That's good. That said, it's also comparing against a relatively soft period. So the next couple of periods are going to be much harder to come up with those kind of numbers. Politics and spending is another theme that we really, I think, really need to focus in on. Obviously, the chant in Washington is let's spend, baby, let's spend, right? I mean, we are seeing an incredible amount of just let's spend, figure out how to pay for it sometime in the future, and let's make it look like we're trying. We're trying to somehow pay for all this. In fact, it's a comedy of errors. It's a joke what they're doing right now in Washington, trying to just figure out something where they could throw it against the wall and maybe get it to stick where billionaires pay or companies pay, and it keeps on getting knocked down. Just anything. Oh my God, let's just get something passed so we look good and we can save ourselves here. That's what Washington looks like right now. That's why we're seeing some intraday volatility on every single politician coming to the microphone and saying something or another, whether or not it makes any sense or not. So right now what we have is a situation where the Washington shenanigans are causing a lot of concern and at the same time a bit of relief. So we're seeing this back and forth washing machine motion going on. China and COVID, there's some new lockdowns happening. Parts of China, again, are seeing a massive spread for China. They have a zero COVID infection rate policy. And with that, what's happening is that there's some concern when they see an outbreak as small as 15 people in a town and they start locking down. We see lockdowns in Russia. A lot of countries around the world are beginning to really get concerned about this Delta and now this new Delta Plus. Now, I don't think there's going to be any amount of COVID that is going to require the U.S. to shut down at this point. Europe probably the same thing. Some countries are a little bit more sensitive to it and think it's a better idea. Some countries don't give a damn and say, the hell with it. It's all about the economy. We can't let people starve. So right now where we are is in a situation where the U.S. economy is slowing. So the GDP print yesterday at 2% versus the 2.8% expectation. Interestingly enough, yields on bonds went in the reverse than what you thought they would go into. In fact, yields were up a little bit yesterday. The stock market was up, some of that earnings based, of course, but we are seeing a slowdown around a variety of areas, and the Apple and the Amazon numbers today probably bear out some of what we're seeing as well when anything involves hardware or goods or products or imports, something tangible. There's the idea of bits, whereas companies deal in bits. A Microsoft, aside from their hardware, or a Zoom Media, that's bits. There's really no supply chain issue there. Whereas you have a company that sells products, there's some issue there. And Apple being at the forefront of what's going on today with the chip slowdown, they said $6 billion of their overall sales are deferred due to the fact they can't get the products manufactured. It's a lot of product. In economics, we also saw employment gains, wage increases. Next week, coming up, we have an employment number again. Interesting to see how the markets react to that. And probably sometime in the month of November, the idea was that we're going to start to see a slowdown, a tapering of the bond purchases by the Fed. We'll see what happens with that. One of the other things that's really interesting is this hyperinflation discussion. Have you been hearing about that? This hyperinflation discussion. So Jack Dorsey's talking about it. Paul Tudor Jones has been talking about it. But then we have the other side, which, of course, anybody in the Fed is saying, no, 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 no. In fact, Janet Yellen just today said that, if we pass this spending bill, it's actually going to be good for inflation. It's going to slow down the pace of inflation, which I have yet to really try to understand what the hell she's talking about there. But we have this hyperinflation discussion that's coming in. Really not seeing it yet. There's some discussion about how it's going to be very sticky. We are seeing inflation. Hyperinflation, not sure about that. The big question also has been to hedge or not to hedge. Portfolio hedging right now has been very difficult at the least. You have to be very good on your timing, information, news flow, facts, data. Really not as important as the fact of just lifting the price on stocks. And we've seen that with a couple of names over the last few weeks. Because what's happening is that the higher prices are bringing on the fear of missing out, right? And the lower prices are bringing value players right now. What we're seeing is that there is that, hey, everything is good. Good news is really good news, and bad news, not so bad. It's temporary. It's going to be rectified. And if worse comes to worse, well, the Fed will take care of it. So right now, there's a big issue. And one of the things is the free money that we are seeing where basically, there's all this money is flooding into the markets. Liquidity is very solid. We know this, nothing different than we've been talking about over the last year. But you need to keep that in mind. One of the things that we are seeing is the KRI indicator and a few other technical indicators being a little bit overbought. Now, we see this kinds of formation like we are here. And I talked about this right about here. I let a note out. I said, hey, you know what? We got to a 5 that day. I put out a note on Twitter and said, you know what? Look for a drop. Look for a roll in the next couple of days. And lo and behold, look at that. We got that. Not a big roll, not like this kind of cascade that we saw here down, but that may be starting just now. We're going to see this right now where we're at 455. So let's kind of draw that in right about there right now, starting to roll back over. Sometimes you see that kind of thing happen, but we have multiple clusters forming, these red little dots. We're seeing this oversold level really start to come up. It did come in from a +5 to a +2, +3 after that little bit of a roll down that we saw intraday over here. But right now where we are is back to an overbought situation, moderately overheated. And that's just one of the indicators that we're looking at. You can see also that the Spearman indicator right here, there's a Spearman index, is also in the high, starting to roll over after that real big move up. And oftentimes you want to see that roll, and we are, let's see, the red go through. We'll go through, let's see, right? We're almost there. See that blue starting to peek through the downside here. McClellan indicator still at a +63, probably going to come down a bit today. As we see, it depends on where the market's open, et cetera. But all of this is leading us to believe there's a little bit of an overbought situation going on. Tech and bank earnings were great. Inflation pressures are not worrying investors at all. The biggest news right now is about Apple's privacy settings and how they're impacting companies like Snapchat and Twitter and LinkedIn for that matter. Facebook, which is now Meta, new name for Facebook. That's going to take us a long time to figure that one out. But one of the big things we saw was, of course, that Snapchat report that pushed the stock down like 25% last week. And Twitter having a pretty ugly day yesterday. Facebook doing the same thing on a roll, not as bad, down about 4 or 5%, but down about 10%, 12% from their high. The Apple privacy settings on some of the social media where you can choose, hey, don't track me, is causing a problem for the advertising. And I don't think that's going to change. I think it's really good for Apple, generally speaking. Amazon seems to be not really bothered by it. They have their own little problems, separate and aside on what's going on today. And higher rates, what's going on, although we're seeing a little bit of a flattening of the yield curve right now, the higher rates, really the sweet spot and the real beneficiary of that is the banks. And the banks are doing really well on that, and that's been pretty good. So Coinage, let's kind of just skip to that for a second. We saw the Shiba Inu coin, which is a joke on a joke coin, up 750% in the last 30 days, I think it is, or last 3 weeks or so. Just an incredible move on that. Vaulted it to the 11th largest. Bitcoin has an ETF now, a futures ETF. Symbol is BITO. One of the other ways that you can actually get into Bitcoin without going to the cash contract, with the knowledge that is really not the best way to invest. You know, Bitcoin futures, well, just like other futures, you are subject to costs related to the rolling impact and contango and fees. And that all can be issues with regard to the actual return of the product. When we find that ETFs that invest in commodities and futures, we've seen some real horrible overall performance. In fact, many of these are perennial short items only because the very nature of how they operate, not what they're linked to, not how they actually roll on a regular basis, but the actual internal operations of what goes on and how they have to buy their futures contracts and roll them over and sell them and then buy the next one, and all of that sometimes leads to just naturally bad performance. But the ETF companies don't care. They get their fees no matter what happens. Tapering, one final thought on this. I think we talked about this, but I'm just going to mention this. Tapering will be gradual and simply a reduction in the overall. It's not going to be a stoppage of buying of bonds. I mean, the thought that they're going to start sometime November, December this year and second half of next year and be finished with quantitative easing is really not well founded. What's going to actually happen is they're going to cut it down. Maybe they'll do 10 billion or 20 billion a month for 5 months, something like that. Maybe stay with about 60 or 70 billion dollars worth of purchases moving forward. That's the way it looks to me. Fed has no intention of increasing rates. They know the damage that will cause, and that's going to be a problem. I think that also their lack of moving on this will backfire on them. We're going to look at that. We're going to look at some stocks this week. We had some very exciting and explosive moves on names over the last week. The DWAC, which is the Trump-linked SPAC. A few other names in the electric vehicle area. The names that have been providing solar. So we'll kind of look at some of those. And please give me your names inside of, I'm going to type it for you here, where it's going to pop. It's going to here. There you go. Give me some of your names that you want us to look at as well. Let me just get this here. DWAC, this was a fascinating one. If you look back on this, it's only a few days old. Came public after SPACing in at about 13. It was 10 for a while, and then all of a sudden it jumped up one day to 42. It went to 175 and came in. What's really interesting about this is, let's take off the radar right now. And I think next month, by the way, November, we're going to start doing some more just a little bit further education about what all these things really mean and getting down to it, as opposed to just simply providing you kind of quick overviews. I'm using a 30-minute. I'm using a daily. This is what the overall looks like when it comes to the TriggerCharts Commander series, where you get the multi-time frame on top here. Gives you all these signals that you can just look at very quickly, sweep across from right to left, look at what's going on with long 5, bias is long 4, nothing in the trading bias for daily, for example, there. So we're looking at this DWAC. I mean, you got to look at this and you say, hey, well, what's going to happen? You could have been buying and selling this till the cows came home and made some great money on this. There's a 30-minute chart on the right here. Basically, you see this go above kind of 76, 78. That's where your levels are, and they'll pop probably up to the 90s, to be honest with you. Downside, 67. Play this on a short term, even on a 10-minute. Look at maybe even a 10-minute. See if you can kind of look to pull some information out of there. This thing moves very, very quickly. What you do on these kinds of names is you kind of buy on the downs, right? Buy on those slopes on the downside where it holds. Kind of hold your position. If it breaks down too much to the next level, just kind of get out of it, wait for the next signal, or from that inside the parameter of the altimeter where you're buying on the on the downside. Just wait till it breaks real quickly. Be very quick on this. 10-minute, I don't know. I'm a big fan of 30-minute. I like that. It's a lot clearer to look at. And again, I'd kind of mark that at about 77 and change for breakout. Even put a buy stop order in the market right above there, right, kind of at about 76, 77. That's what we're looking at in that area. That's where you got the 76.70 right there. BKKT, another one that's been running. Look at that, came right back perfectly into its support level, bounced right off it. Right now trading at 24.65. Well, look at that, 24.65. What number is this? This level, when you look right here, 24.65. That's where it's trading right there. That's what's so great about these very simplistic but yet elegant horizontal lines that we put on that calling the altimeter, where you have a level of support, you have a high volume node, and you have up top here the resistance. We call it the lift, cruise, and stall, keeping up with the airplane monikers, if you will. So what we have going on right here is another one of these that could just be incredible. Just blasts off, right? Look at this. Went from 17 up to 36 in a matter of, this is 30 minutes. So 1, 2, 3, 4, 5, 10, 300 minutes, 250 minutes. You know, you're talking about a matter of 4 hours. Pretty good. Look at these kind of levels. Now, right now, you're flirting with, hey, 1 second, this could really break down. And I would look for this possibly to break down back to, the 18 level again eventually. But right now, you have a little island right here in the 21s. I would play this range right here and watch it very closely. Put a stop a little bit. Give yourself a little bit of room here. Buy less shares so you're not shaking out. That's the trade. That's the trick. This will come back, in my opinion, but right now it's still trading. Fun is another one. PHUN, Funware. Look at this really nice level of consolidation right now. 456 is trading at right now, which is just right above the level of support. Got some great support along this line, kind of right here. Along this area right here. Trading at 456. Where is that? 456 right now, right about here. I would look at again, short term, because these long-term charts don't give you any information at all. But this thing did also go up to about $22 from 95 cents. That's a winner in any book, right? You start looking for this to break out above I would call the $5 range and see if you can kind of trade that. And then look for that to break up again towards 7. Ford on a really winning move yesterday, closed at the bottom half of its, actually bottom third of its range yesterday. It ranged up to 1758 after some really stellar numbers. If you look at this, and what's really important to look at this is when you just step back for a second, take a glance, look at the chart, what do you see? What we see is a major turnaround from the aileron, which is our momentum indicator, very powerful, extremely powerful indicator. And if you're not using this, you really should. The tack-on cost on this is so insignificant. And when you look at that and combine that indicator with the autopilot and with the altimeter and even the radar for that matter, you have multiple confirmation points to boost your confidence to making that trade, to hold that trade, or not to make that trade. That's what this is all about. How many times are you sitting there going, I don't know, should I do it? Oh, I missed it. And then you don't do it. Then you're like, oh, forget it. There was a stock, seriously, that I was kind of doing a few things. And I'm like, it's trading at 22. I'm not sure if I want to do it. It went to like 45. And then I'm like, what did I do? Why did I miss it? If I could have just mapped out a process of what I was going to do, a trading plan, and said, if it breaks above 22.5, I'm going to go in a partial position and put a buy stop on there. An order, a buy stop. If it gets above here, buy automatically. I would have been in the money. But yet what happened was I was kind of like doing a few other things, and I wasn't really I wasn't in that mode right then and there. That's what happened. And but what you could do is set yourself up. What you do is you look at these levels and you say, okay, here's the level, and I'm going to start to think about my trading plan and write it down. If it moves above 22.5, I'm in. If it drops below 21.50 or whatever the number is, I'm out of that. If it gets up to 42, I'm going to trim my position. WBX, another wild winner over the last few days, right now trading at 1744. Let's see what that is. Right in the middle of this range right here to the top end. Right, look at that. Look at that. Right on about 10 cents away from the top of that, and it's kind of early market, so we don't know what's happening. You start moving above here, you got another big jaunt up to the upside on this stock. I talked about Beto. Bitcoin Trust. Lucid's been on just on a flame out. Look at this. Up 9% after they gave some positive guidance overall of where, in fact, they are going to start producing their cars. So big consolidation. You could just simply just look at this for yourself, right, and say, well, look at this consolidation that we saw forever, broke out. Now, that was an easy peasy, right? You break out above 28.69, you start buying shares. There was this huge consolidation from March. All you do is draw the lines which are touching all these tops, all these support. I didn't draw it exact, but exact would be like right there. Oh, I didn't do it. There you go. That huge consolidation. They say, well, if we just break above there, there's the line. There is the line in the sand. It's right there in front of me. And if I had my trading plan set up, you know what? Right above this level, right about 28.21, let's kind of squeeze it out to 28.25. Hey, that would have been somewhere that I would have bought. Toast, interesting. These are these lines that we drew. There's kind of staying within there, kind of gets above it, then comes back in. 53.96, 54. Above that is kind of where you want to look at. Overstock, somebody's asking us to look at. This trades with the coins. You know, this is basically right now trading as a Bitcoin company. It always has. It's you know, a furniture company. Has an interesting chart on the way up. I do like this. I think it's pretty good. The trend is generally kind of up. It's got this declining. If you look at here, it's got this relatively, right? You see this kind of channel right there? You got to break above here, this level, just to move up. It looks like overall. ISRG, let's see. There you go. ISRG, Intuitive Surgical, looking pretty good. Robotic surgery bounced perfectly on its line. It was overdone on the downside, or the trend was to the down. Look at that. We popped right here. Perfect. Kind of a banger setup, but not perfect banger setup that we talk about. You can look that up, the banger setup TriggerCharts. It'll teach you on YouTube what that looks like. Looking like an all-time high. Looking good. Big move on yesterday as well on that. What else we got? Where's Apple trading? Let's see that. Down 5.5, down 3.5 stock. Got $146 down on Amazon after their earnings. Tesla doing incredibly well. Been in good shape all the way since 8/27 when it broke out and didn't look back on a daily chart. This is the solar ETF. Looking pretty good. Kind of a wonky chart. I mean, you got a lot of air above here. You know, draw that line. Very simple, very simple. Where's that last major level of resistance? Hanging out about the 96.78, trading about 97.80 right now. Again, you could adjust these to exact levels. But above there still, kind of look for that. Has probably some upside from there as well. What else we got on this list? Lucid, we talked about. Toast. Upstart. Upstart, kind of an interesting company. It's an AI company that deals with loans and helps out the loan industry. Look at that. Perfectly several times. Look at this landing perfectly almost every time, just sitting on top of all these lines we draw. I mean, if you don't see that right there, if you don't see how perfect this measures, look at this perfect measurement of where your support is. Then the resistance, get out right there, and that would have been great for 369. Down to 330 or so right now. Right now, we're going to hold on 315. That's a big number, but really it looks like there's much better support at 288 for this. Any weakness, which we're starting to see on the rollover right here, probably going to be something to reckon with. Hey, thanks so much for joining me. We'll see you again next week. It's time to start trading in the markets.